Good morning, and welcome back. If you're watching this before Monday's open, you're in the right place. NIO stock has been on a wild ride this week, bouncing back from delivery concerns, hovering between $4.50 and $5, and somehow holding ground as broader sentiment bounces back. But today, I want to focus on something quieter, yet powerful, something that may not make headlines but could quietly shift the narrative: battery swap economics. Let's start with the basics. NIO has built a battery swap network, a model that replaces depleted batteries in just a few minutes instead of traditional charging. This is still quite rare in the EV world, and NIO is the global trailblazer here. Market beat. Wikipedia. +3. Wikipedia. +3. Financial Times. +3. Today, that network isn't just functional, it's gaining traction. Recently, NIO announced it's processing an average of 97,000 swaps per day, which comes out to one battery swap every 0.88 seconds. CNEV Post. +1. Wikipedia. +1. That's staggering volume. Think about it. Thousands of drivers are waking up, swapping their battery in under 5 minutes, and hitting the road. It signals not just usage, but dependency. Drivers rely on it, and they prefer it. We've seen that before when NIO broke 50 million cumulative swaps, highlighting that many users prefer this to plugging in. Wikipedia. +4. Electrek. +4. Energy Metal News. +4. But here's where it gets interesting from an investment perspective: profitability. Analysts predict that each battery swap station can break even if it handles around 60 to 70 swaps per day. Market beat. +5. CNEV Post. +5. CanWSChina.com. +5. With surging usage, stations are rapidly approaching that threshold. In fact, NIO CEO says many stations, especially in Shanghai, are already close to breakeven. That's a huge shift, infrastructure no longer being a cost center, but moving toward maturity. Why does this matter for stock investors? Because when you flip from capex-laden to cash-generating infrastructure, margins can improve sharply. The battery swap network begins to move from a cost line on the P&L to a source of recurring value. That's a quiet transformation, but it's potent. Now, this isn't just good for NIO's bottom line, it also strengthens the strategic moat. Delivering infrastructure that's trusted, fast, and increasingly profitable sets NIO apart from competitors. Tesla may have superchargers, others have fast DC chargers. But the idea of walking in, swapping a battery, and walking out with full range in minutes, no lines, no wait, is something NIO delivers today, and scales up every day. That explains why sentiment data puts NIO high in EV stock rankings. NIO ranks in the 72nd percentile in overall investor sentiment across forums, higher than most peers. CNEV Post. StockTwits.com. +2. Altindex.com. +2. Market beat. +2. That soft bullishness reflects more than product hype, it's infrastructure confidence. So as we head into Monday's session, consider this: NIO's story may be less about monthly deliveries and more about infrastructure economics flipping green. And this week, battery swaps are quietly becoming a growth driver. Here are things to watch this week. Early week volume: look for strength in trading volume. If buyers show up near $4.80 to $4.90, it suggests support for this infrastructure narrative. Analyst chatter: keep an ear out. Morgan Stanley is maintaining a buy with a price target around $5.90. Yahoo Finance. +11. CNEV Post. +11. Quiverquant.com. +11. Yahoo Finance. That suggests there's still analyst conviction behind the thesis. Sector momentum: if peers like XPeng or Li Auto rally on delivery data, it could bolster NIO further, even if the mechanics differ. Quiet updates: no major product or financial headlines this weekend, so the swap economic story remains the most tangible narrative moving forward. Let me be clear, we're not claiming this will launch a 10% rocket ride. We're talking about slow, foundational improvement. If the market sees battery swapping transform from gimmick to cash flow, that could underpin better earnings outlooks later this year. And for investors who value sustainable models, this is the kind of story that endures. So the tone here is measured optimism. It's not hype, but quiet recalibration. And that tends to perform well when markets normalize. As for how to play it, traders might start positioning near support, watching for a clean move above $4.90 with staying power. Longer-term holders should monitor swap usage and infrastructure margin shifts. NIO strategic advantage begins with this network. Thanks for watching your early week NIO update. If this analysis added perspective, hit that like button, subscribe, and comment. Do you see battery swap economics swinging the value equation here? Or is delivery still king? Let me know, and I'll be back with updates as the story unfolds.